Hello, this is Will Allen with Centera Capital. In today's market update, we are going to be checking in on company earnings estimates for 2024 and talk about why they are so important. We're also going to drop in on the latest jobs market data. And lastly, we're going to look at economists' 2024 U.S. economic growth projections. Let's get into it. Now, before I dive into the market update, just a reminder to like and subscribe to the channel or share with any friends or family who may not be getting these kind of market updates. Point one, we are talking about company earnings and why they are so important. And that is because in the long run, the stock market goes where company earnings go. Over the last 20, 30, 40 years, companies have made a lot more money, and thus the stock market has gone much, much higher. We want to look today at what company earnings estimates look like in coming years. So we're going to put up the first chart, and you will notice for 2023 there, you will see over the last couple years, back in 2022, company estimates were much higher than where they ultimately ended up finishing. And that's one of the reasons that you had the big decline in 2022 in the stock market. The market was getting ahead of the fact that company earnings were not going to do very well. And in fact, for the full year, 2023, company earnings only grew 1% year over year. Now take a look at 2024 estimates, and you'll notice there that those are much higher. $244 of earnings, up from $221 for the year 2023. And I also want to point out the red line. This is for the coming 12 months. We're here now in May of 2024. This is looking over the next 12 months. And notice the slope of that line has been higher for about a year now. And that is really good news. That is, estimates are going up for the next 12 months. And it's one of the reasons, by the way, that the stock market has done really, really well over the last 9 months. Now, one last point I want to make here. If you take a look at 2025 and 2026 on that chart, those estimates are much, much higher. $278 for 2025 and $312 for 2026. Now, those numbers will probably not be right. It's going to move around some. But the key point I want you to know is that analysts right now are seeing much higher earnings over the next couple years. And that is a very good backdrop for the stock market. Now, things can come along and throw a wrench in the plans. COVID year was the best example of that, is that 2020 earnings estimates ended up dropping significantly once COVID happened. These analysts couldn't foresee what was going to take place. So we always have to be on guard for anything that comes out of left field. But for now, good news. Companies are continuing to have their earnings go higher, and that has powered stock market gains. All right, point two today, we're looking in at recent jobs market data. Now, it's important to note that our North Star, basically over the last couple years with regards to our forecast for the U.S. economy, has been taking a look at the jobs market. At the start of 2023, when over 90% of economists were forecasting a recession for the year, one of the reasons we did not believe that was in the cards was the strength of the jobs market. So let's come back now and talk about today and some of the most recent data. The first chart we're going to throw up is claims for unemployment insurance. So again, if someone gets laid off, if they can immediately go find another job, they don't file claims for unemployment insurance. But if they can't find one immediately, they go and file. So let's look at those numbers. And if you put this chart up, what you will see, the most recent number, 215,000. But what's more important here is look at over the last 2.5 years after, and by the way, over on the far left side, when you see that number or that graph coming way down, that was as people who had been laid off were finding jobs in 2022. And then you can see over the last 2.5 years, the claims for unemployment insurance have been in a range there. Every time they've started to tick higher, people will come out of the woods saying, hey, there is about to be a recession. This number is going to go up to 300,000, 400,000. That just hasn't happened. And you will notice again, 215,000 is in the range it's been over the last couple of years. This is very good news. Now, the second graph we're going to put up, or chart we're going to put up, we're taking a look at job openings. How many job openings are out there? So we put that chart up, and what you'll notice here, the most recent month, this came in at 8.48 million job openings. Now, this is down from its high of over 12 million about 2 years ago. But that's not the key point. The key point is you got to look at the level of where the job openings are at right now. And let's look over on the left side of this graph. In 2018 and 19, you had a very, very strong economy. And the peak in that time frame of job openings was 7.6 million. So if you take a look at today, we have nearly 1 million more job openings than we did at that time when you had a very strong economy. All right, for our third and final point, we are taking a look at economist estimates for U.S. economic growth in 2024. And the measure we watch most closely is GDP, gross domestic product. When you break that down, there are various components. The most important two of those are household spending and business investments. So let's take a look at household spending. And what you'll notice is that this forecast has been going up ever since last July. In 2022 and early 2023, when you had economists forecasting a recession, this number was going straight down. But of late, it has been going higher and higher. The most recent number is 2.4% year over year, which is a really solid number. Now, let's take a look at business investment. And here you'll notice the same thing. This number has been going up, especially once we got into 2024 and has gone from a 1% year over year forecast at that time to now over 3%. And yes, the investment in AI is a big piece of this, just so you know. Okay, so to recap, we talked about how company earnings have been going higher and are expected to grow at a very healthy clip in the years to come. We checked in on the jobs market and see that it is still very, very strong. And we closed with looking at economists' forecast for household spending and business investment, and it is expected to grow at a very strong clip. Well, we will be back in 2 weeks for our next market update. Until then, take care.